Hi everyone, let's go over my micro and local bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bullish scenario where we're looking for a finished double zigzag to the downside in a WXY with wave Y ending on top of the 0.618 trend-based fib extension taken from the high to the low of W to the high of wave X. You can also see that this low over here has been made before the fib times that I have on my chart. And these fib times are taken from the high to the low of W to the high of X to compare the time it took to develop wave W with the time it takes to develop wave Y. The most common target between W and Y for a fib time is the 1-to-1 over here, and the second common target is the 0.618 to the 1.618. But as you can see, this low over here has been made before the 0.618, making wave Y very short in time compared to wave W, which is less common. Now, if this is the low of wave Y and we are looking for a move back towards the upside, we want to see and count impulsive structures on the lower time frame. So let's have a look then. If we go to the 5-minute chart, can we count valid impulsive structures from this low? The first option is this one over here, where we have a 1, 2, 3, 4, 5 wave move, and especially this wave 1 was a very nice impulsive structure. Then we have 2, 3, 4, 5, and the problem of this count is that wave 3 is the shortest wave between 1, 3, and 5, and that is not allowed because wave 3 cannot be the shortest wave. So then we have to move maybe wave 5 up, put 3 over here, put 4 over here, right? Then we have a bigger 1, 2, 3. 3 is not the shortest anymore, 4, and then a wave 5. But if we take a Fibonacci from the low of 2 to the high of 3, and we drag it on top of this wave 4 over here, the low, then you can see that it retraced to the golden pocket, which invalidates a wave 4. The maximum target for a wave 4 is the 0.5. Candles closing over here below the 0.5 is definitely not what you want to see, and usually also invalidates a wave 4. But a golden pocket hit for a wave 4 is extremely rare, so other scenarios are preferred. And also, if this was a 4 and you're looking for 5, then this looks very much like a 3-wave structure, another 5-wave structure inside of that wave 5, lowering probabilities for that particular scenario. If we then look at the micro bearish scenario, then we're looking for a unfinished WXY double zigzag. So we still expect another low to be made, where interesting resistance above price is this target box over here between 26.5k and 26.6k. An interesting support for this wave Y is over here between 25.7k and 25.9k. Now that means that we want to be able to count this as a 5, 3 and eventually another 5. But most importantly, we want to count 3-wave structures over here to the upside. That's the goal. So if we then zoom in to the lower time frames once more, then in this scenario, the move to the upside is labeled as an ABC, a 5-wave structure, a 3-wave structure retracing to the 0.382 over here, by the way, which is a common target for a wave B, but a rare target for a wave 2. As you can see over here, price retraced to the purple line very nicely. That's the 382 for then a wave C to the upside. So we have a 3-wave structure to the upside over here. However, after a wave C, if this 3-wave structure was finished and we then continue our way towards the downside, as we are looking for an impulse of 535, you want to count 5 waves to the downside. But this was very much a 3-wave structure, not a 5-wave structure. So we were expecting at least then this high to be taken, which was done over here, which now leaves us with 2 options over here. First of all, this is the high of then a W, X is in, and then this is wave Y over here. So we have a 3-wave structure and then a WXY. And now we're looking for an impulsive structure to the downside. However, in a WXY, which then finishes wave B, by the way, over here, this wave Y again is short in price this time, not even in time. So if we take a trend-based fib extension from the low to the high of W, to the low of wave X, and we toggle on the wave Y targets, then you can see that the usually minimum target for a wave Y, being the 0.618, has not been hit, making this wave Y very short compared to W, basically only a wick. As you can see, it was basically a swing failure pattern. So therefore the probabilities are higher that this scenario is not yet finished and that we are still looking at a move towards the upside in a bigger W sideways X and then eventually another Y towards the upside. What's also interesting is that we have a double bottom over here at 26.2k, which is always a magnet for price and is something we definitely have to keep an eye on. And the support, the first area of support below price, besides this double bottom, is this blue box over here between 26.1k and 150k basically, right? Now, if we look at the CVD divergences over here, then we do have a bearish CVD divergences. I can show you over here, lower high on price, but a higher high on yellow as well as on blue. However, when price was dropping here, the blue line is dropping quite quickly, almost generating some bullish divergences. So it's interesting, but at the moment as it stands, the only CVD divergences that are visible are the bearish CVD divergences, where the target is then this low over here. And that could be interesting because if this low over here is a potential target, it's going to hit the double bottom over here to maybe grab the liquidity and then a move towards the upside. It has to be said that the blue CVD divergence, the blue bearish CVD divergence, lower high on price, higher high on the blue line, was a second CVD divergence with this high, because you can see from this high to the downside, lower high on price, higher high on the CVD, which already played out with price moving to the downside. That was the first divergence and this is the second one. So we'll wait if price can move to the downside. For the yellow line at least, it's the first CVD over here. So maybe looking for the double top if price moves to the downside, looking for the double bottom, sorry, not the double top, double bottom here, maybe support in this area for then a bounce back towards the upside. Because if we look at the probabilities of these scenarios on the different time frames, then on the micro, because of the difficulty of counting this move to the upside in an impulse, the probabilities are higher that we still have another low to be made in then a WXY double zigzag, where we are going to reach this lower target box over here between 25.7 and 25.9. More locally, however, on the lower time frames, the higher probability scenario is that we still have a new high to be made more locally in a bigger three-wave structure, where this resistance area is going to be very important and very interesting between 26.5k and 26.6k. So in conclusion, the upper target box maybe hits first before then eventually the lower target box. This is something I'm looking for. However, could move down, hit the double bottom, or hit this support for then a bounce towards the upside. That's at least something I'm going to keep my eye on. In all scenarios, you want to see proof of resistance, proof of support, right? You need reasons to enter following your plan, strategy, and entry requirements. Price can also just do this and not come down first, but instead just continue. We wait and see what price does, right? But the higher probability scenario at the moment is for price to at least move to the upside once more before then moving to the downside, making a new low, and then have a bigger bounce. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one.